Good morning, good evening, good afternoon, depending on where you are in this world. This is Ejin Lee with a daily S&P 500 index update. So I wanted to start off with the cycles. I had shared before this, and I think we'll be putting this on the table pretty consistently. It may act as a very good guide, but not only that, jive well with the patterns and Elliott waves. We have the 5 week that is still pulling the price down. Okay. And at around the 20th of July, the 10 week will be pulling down as well. But for now, we have the 10 week, 20 week, and the 9 month cycles pulling it up and gaining momentum. Okay? And if that's the case, just like this arrow showed, and this arrow was placed, I believe, a couple of weeks ago, there should be a swing back up onto this channel to the top line of this trend channel. And we should get somewhere maybe 2,800 or so. And maybe it'll spike up and exceed the prior 2,872 and hit the 3,000. So I think the dominant cycle right now is still the 9 month cycle, as it had been for the one prior. And this 9 month cycle will not reach the midpoint probably until mid-November or so, first half of November. So that means we can be bullish from now until the middle of November, let's say, if the 9 month cycle remains dominant. Now, these pull downs will represent corrections, just like the one here. Okay? And as these corrections occur, it'll just be minor corrections on the trend of up for the upside. Now, yesterday we discussed an alternate. I think today we can pretty much put this away, given the fact that we probably have the ABC complete. The bull wick event did occur in 3 times, let's say, and that is what I have been calling the needle and thread. So the needle and thread bull wick event, I believe, has completed. We can probably nicely put the wave 2 here as the end of the C. What we thought as an alternate, as a potential triangle, has been busted to the upside, and that's a good sign for the continuation of the original trend, which in this case will be up. So I have now zoomed out a little bit. This channel still remains. One thing to consider on a bigger picture is that this whole thing is an A, B, and then you've got a C down potential. And I think that could be better assessed as price reaches this top trend line. The way I have it labeled right now is 1, 2, 3, 4, 5. We should be getting an all-time new high at in excess of 3,000. And that means from now until maybe middle of November or so, we've got an uptrend going on. Even if it goes to an all-time new high, the whole thing could be A, B, and we've got a C coming. In other words, an expanded flat. Okay, so you've got A, B, C. Or you can say 1, 2, 3, 4, 5, but this is more of an A, B, C. It's for A, B, and a C. So that's a bit of a more of a longer term perspective to look out for and be aware of. A bit of a thunderstorm going on here. Getting some badly needed rain. And that longer term can look like this, where you have now A, B, C. That's one scenario where you've got a flat. As soon as I start talking about bearish connotations, a thunderstorm arrives. So you've got the ABC scenario where this will probably travel in its upward channel as labeled. And once it does finish, maybe somewhere up here, 2850 or so, and then it'll decline for in an impulse wave of manner of 1, 2, 3, 4, 5 to the C. The second scenario can be, you've got again that A, but an expanded flat, B, and a C. And in this format, it'll mean that the B will rise higher than the origin of A. That's why it's called an expanded flat. But even if we get this correction, I don't think this would be a perma bear's dream come true, because this will be just a correction. Okay? And this correction is really just a healthy correction so that we can go well beyond the 3,000, probably in 2019 and 2020 as well. All right, I hope you found this to be helpful. And if you have any questions, please post it in the comments. Have a great day.